Everybody, hope you're doing well. Today I started a 1K account challenge, quote unquote. I don't really view it as a challenge because this is just going to be my main portfolio. $1,000 is the amount of money that I feel comfortable risking right now. Or if I, somehow blow up the whole account, I can walk away and say, well, it's not going to ruin my life and I'm going to be okay. So I'm starting an account with $1,000 and I plan on documenting all of the trades that I take on my live streams from 9 to noon Eastern time here on the channel. So if you'd like to tune in and see what I'm doing, you can definitely do that there. Definitely do that there. I don't guarantee my wins. I don't guarantee my losses. If you tell me you're responsible for your own decisions, I'm not a financial advisor, blah, blah, blah. You know the whole deal. But I did start with $1,000 in the account today, and I made a whole whopping $5, which is fantastic. We had a great day. I took 2 trades. The first one netted me $33 of profit, and the second one gave back $28 of profit. So I ended the day green $5. Which isn't bad. What I'm disappointed in, though, is my execution. And I even went into this. Let me back up, actually. I'm not disappointed with how I managed my trades. I'm disappointed that I chose a short opportunity over a long opportunity. I should have read the room and read the environment better because I would have made some face-ripping money if I just looked at the market in my video like I did yesterday and actually went in. I wouldn't say I had a bias today, but we got a rejection on something, and I kind of got caught up on, okay, this is going to finally be sort of a topping level on Tesla, which is what I ended up trading today, so I'm going to get into that. But that's not what ended up happening. So all said and done, considering the fact that Tesla ended the day green 4.93%, I'm not mad that, I didn't end red. That's a good thing. But, God, it really feels like some wasted opportunity when you get a day like this on increased volume, a really nice clean breakout where if you look at the things on the 5 or the 15-minute time frame, it really was just clean. And even on the 5, you didn't really get a whole lot of red candles. I mean, this would have been just some easy money. This would have been like, hey, we broke out of this little pennant right here, buy calls, fucking hold it. There would have been no sweating at all. Like, you would have just made buco bonkers money, which is, I don't like playing breakout trades. Like, these to me are riskier, but I probably should have looked at the fact that volume kicked up on this breakout candle, then continued to kick up on the second one, and that would have been the green flag to be like, okay, this is most likely going to break out. But that is not what I played today. I played a different setup, 2 different setups, and I'm going to go over each of them. Now, the first one I'm really happy with. The second one, hindsight being 2020, I should have looked at this trade a little bit differently than I probably did intraday. But nonetheless, I'm going to go over my thought process for what I did. So my first trade of the day was Tesla puts, and my second trade of the day was also Tesla puts. And my first trade of the day, I bought into puts right after this tweezer tops on the 15-minute time frame. And the reason that I really liked it was because the SPY, which was also doing some stuff today. I'm going to take a second to, whatever, this isn't really that important. The SPY today, intraday, gave us a really nice rejection candle in the 15-minute around the same time frame. So if you look at this on the 15-minute time frame, you got this nasty hammer down rejection candle right at around the same time. What is this? 10:15. So at 10:15 on Tesla, you got this candle. And I like that. I thought, okay, this makes a lot of sense for potentially getting some sort of move down. It took a little while to see the trade play out. And maybe that is like a red flag in and of itself. The fact that it had to chop around in this little area for so long before eventually giving me this move down. But nonetheless, the trade did work out. And I'm not actually that mad at the setup. I think you just didn't get a whole lot of follow through. So that's what I did. I bought 277.5 puts for next Friday. I wanted to play a longer term expiration, something that moves a little bit slower so that if I'm wrong, I'm not getting my butt kicked. I want to walk you through what my trade thesis was. That's a fib, my bad. I meant to grab my short position R&R here. So when I entered the trade, I think we were sitting about here. And my risk tolerance was a break above the intraday high. What I was targeting was intraday lows. So that's an R&R of about 3. That's not a bad trade setup, right? What it would have required would be a break of this uptrend that we had, which we didn't get. So I actually got out of the trade earlier than I would have liked to, but nonetheless for green. So I got into the trade about here on the 5-minute candle. It knifes down and then chopped around for a little bit. And then we got the real move down. And I know that I sold one contract down here for about 20%. And I sold another contract at the top of this candle for like 10%. So it wasn't crazy. I based like $250 of risk The trade ended up being $33 green. My account's got $1,005 in it now. But my second trade that I took, I'm going to come back to do that 15-minute time frame here. And I also want to show you, let me back up actually before I move on. I want to show you that you got a high volume rejection here, and that was what sort of put the green flag in my mind of maybe we should play some puts here. And the SPY on this rejection candle on the 15 also had higher volume. So this to me was a red flag. Now you can get low volume float ups, like this can happen, like you got intraday. You don't need a lot of volume to continue to slowly grind stocks up higher. I don't think index is really the focus of today anyways. I think that the chip companies, Palantirs, the Teslas, the Hoods, the MSTRs are what really had you the good day and made you some money. But nonetheless, the volume here was very telling. So that to me, I'm not mad at that trade. I think that was a good trade. I think you just didn't get a lot of follow through. It was a little dink doink type setup. My second trade for the day on Tesla was also based on the 15-minute time frame. And I played this setup right here. I played what looked like a push up by bulls, followed by a push right back down by bears on the 15-minute time frame. I thought that it looked like the resemblance of sort of a head and shoulders setup right here. If I get rid of the trend lines, you can maybe even see this a little bit easier. You've got a very clear left shoulder, head, right shoulder. Maybe you would have liked to see this come back down to the neckline a little more. Like this would have made a little more sense. I guess I considered this wick down to be sort of that neckline touch, and I wanted something more like this. But it didn't happen. And when we didn't immediately get a push down, when we sort of floated here for 15 minutes, red flags should have been going off probably in my brain a little bit. But my risk tolerance was not that, right? My risk tolerance for this trade was as such. One of two things happened, and I was going to get out of my position. And I'm happy I followed my plan. That is good. That prevented me from getting squoze into oblivion like I'm sure a whole lot of bears did on this huge push up who were banking on a rejection off of 325 like I would have liked to see personally. The pain trade has definitely been against bears for anybody curious. Like if you are counter trend fighting right now, you're probably having a hard time like I did today. I'm happy that I walked away at least a little bit green. But my risk tolerance was, okay, I entered my position about here. If we break the downtrend or we close above this previous 15-minute high, I'm going to get out of my position. And I got out maybe like 20 cents below the high of this candle right here on the 15-minute time frame. So I got out when I said I was going to. And even slightly before my risk tolerance, and it was the same type of trade as I had taken earlier in the day. I wanted to see it come back down to intraday lows, which was a 2.72 R&R. All that means is I'm risking $1.67 of price action against me to get $4.54 of price action with me. Just didn't happen, right? I didn't get that trade set up. And this one, man, if I had been more patient, if I had waited for maybe a better indicator that shorts were stepping in pretty heavy, I probably could have caught this move up. And I would have played it, man. But I don't like revenge trading, quote unquote. Like if I get out of a loss, I don't like immediately flipping to the other side just because I lost, even if it looks good, because it just doesn't feel like the right thing to do. But the right move here was definitely to play this breakout because the volume on the 15-minute time frame tells you the story. Volume increased, and the 15-minute candle after that, volume increased into a major resistance. You consolidated for a candle, volume dropped off, which is exactly what you want to see on consolidation. You don't want to see volume continue to be high and you're sort of just grinding sideways. That's not a good sign that you're going to continue to move. But volume dried out and then picked right back up. And you can see this even better on the 5-minute time frame. So if I switch over to the 5, you've got sort of the same idea here. Let me get rid of all my little drawings. On the 5-minute time frame, if you played, okay, volume's picking up on this breakout, and then this candle right here, you got another increase in volume, you could have flipped it the other direction. You could have said, okay, now instead of short, we've obviously clearly broke out of this downtrend and volume has picked up. So bulls are stepping in very obviously and trying to push this up. So now I'm going to take the opposite direction. I'm going to say, hey, my risk is a break beneath these lows right here, and I'm targeting 325. Now, this isn't a spectacular setup. It's a 2-to-1 risk to reward ratio. You're risking $1.58 to 331. But if it breaks above that, which it did, obviously, there's a whole lot of room to keep ripping for Tesla. I mean, to me, now you're sitting right underneath maybe a major resistance point right here. Like this has obviously been a flat bottom for Tesla in the past, like 335. But above 335, you're looking at probably about here at like 347. Like there was a lot of room to go from 325 to 334. That was a 10-point move, and you got it. You got the 10-point move. So past that breakout, then your R&R is like, okay, this is the next area that I'm targeting. And now your R to R is 7.44. You're risking $1.58 of price action against you to make $11.76 of price action with you. And if you bought calls, the 1 weeks, I'm sure would have been up nearly 100%. Like I made 20% on this move down, which was how much of a percentage? This is like a 1% move down and I made 20%, right? So if you caught and you bought here and all you did was buy, you would have had to do nothing but just sit there. And you rode it until I probably would have got out on this 5-minute rejection candle right here. That's a 4% move. So 80 to 100% in the matter of like an hour, you would have been sitting just fucking disgusting. I mean, that would have made you great money. But I didn't catch that move. And that is frustrating. I'm not going to lie to you. I'm not going to sit and pretend like being on the wrong side of the trade feels good. Even if I managed the trade correctly and I didn't put myself in a position to lose money, I still could have made great money. Like 80% of $250 is $200. So right off the bat, my account would have been up 20%, which would have been fucking sick. But it didn't happen. And that's okay. Even though I'm frustrated, even though I didn't get to capitalize on the opposite side of the trade, I still executed well. And if you execute well, the market will always provide you with more opportunities. That's what I'm telling myself. Because you can't beat yourself up over a day that you don't make money or a day that you lose money. You're never as Colin Gladman says this a lot. He says you're never as good as your best day and you're never as bad as your worst day. And this was nowhere in between either of those. This was nowhere near my worst day, nowhere near my best day. We'll live to see another one. But yeah, those are my trades. That's how I went for the day. I made $5 of profit, so we are sitting real pretty right now. The account ended up being green 0.54%. We made $546 in profit total, which isn't crazy by any means, but that's all right, man. It's a start. And I'm going to continue to document every single day that I take trades. I don't plan on trading every day just for the sake of trading. I want to make sure that the setups look good and they make sense to me. But those were the trades that I took today. They made sense to me in the moment. I'm happy that I have the ability to go back and take notes and observe what I could have done differently and why maybe the stock went the opposite direction. And now, like I said before, hindsight 2020, this is pretty obviously like a pennant setup, right? You were consolidating right underneath a major resistance point. It tapped it, and you could call this a rejection, but it's not a hard one. You could maybe even make the argument that this was a flag down before eventually pushing up, which people in my chat did point out. They said, I think this looks a little bit like a flag. And I agreed. I said, you know what? I can see the case for this being a flag for sure, but I'm going to stick to my thesis because I don't think that it has changed. And I was obviously wrong. Thankfully, like I said, managed the trade well. I got out when I should have, but damn, I would be lying to say that it does not suck to not have been on the right side of that and made some fucking money, man. That would have been cool. That would have been fun. Nonetheless, that was my trades for the day. I want to give you a little update on that, and I will continue to update as things go along. Take it easy.